now we're back, and we're joined by our featured guest over the next hour, Graeme Harris, formerly of UBS. And Graeme has been on Bay Street for 26 years, but he's here right now. Nice to have you here.
It's great to be here, Kim.
Now, you have a long history that you've worked with as a communication advisor with UBS and RBC and BMO. And things are a bit touchy right now, especially with the banks. We've seen some big sell-offs in stocks. How do you advise the heads of these banks, or how would you advise them to communicate to investors right now about what's happening?
Well, I wouldn't recommend they do anything right now. If they were to come out and say something that might be misinterpreted by the market as being something that there is something wrong with the fundamentals. But ultimately, I think that if the volume does start to continue to go up, then you would put out your head of investor relations to talk to the analyst community, or your CFO to talk to the analyst community, just to keep the volume down. But ultimately, the fundamentals are strong in the Canadian banks and in a lot of companies, and this market volatility is simply a reaction by jitters through the debt crisis in the United States, and it doesn't reflect fundamentals.
Do you think, though, I mean, because I hear what you're saying in terms of it's a reaction to the debt ceiling talks and such, but what I've been hearing from a lot of people is just simply that, you know, the economic growth just, it's not there. It's not only is it not robust, we're looking at perhaps a turnaround, recession, in some cases even a contraction.
Well, we haven't seen evidence of a contraction yet.
No.
We've seen modest growth, anemic growth, one might say, but it's still growth nonetheless. And as long as we stay in the positive territory, I think that ultimately you're going to see companies deploy their cash. These markets have been pounding stocks, some unfairly, so there might be buying opportunities. There might be consolidation opportunities in the MA world where they're thinking, well, that company we were thinking about buying is now in our territory again. Maybe we should buy it out.
Yeah, and you're right. A lot of companies have been hoarding cash right now, but it is nerve-wracking right now. I mean, you know, I was just talking with Sherry Cooper about the psychological impact of falling markets. Markets are trying to recover right now, but you know, if you're an investor, you get home and you see your statement, it's going to be a lot lower than it was, you know, this time last month or the previous month, and I think that could actually have a bit of a freezing impact on people.
It could, but the ultimate thing is that Warren Buffett would say is that when everyone else is panicking, I'm buying. So I think that if you are an investor, you should be looking at where part of your portfolio do you want to make more robust and build positions in because it's cheaper, dollar cost average, if you will. And I think that ultimately there are still strong fundamentals in the market. And the governments are dealing with the issues, and we have right here is the gap between the governments taking action and when the reaction and the things start to take hold. So it's that nervous little gap in between that was preceded by a lot of nervousness up until they did take action. So I think that we have to give it some more time, and then investors need to just look for opportunities and not wring in their hands.
I know, I was making fun of some people earlier today about the 30-year timeline. You have to think 30 years out. I'm like, who does that? Who thinks 30 years out? I mean, it's a long time. What about the EU, though, right now? I mean, because we've got economic risk, you know, we're concerned about in North America, but in Europe, you know, we're actually dealing with credit risk still. I mean, we're seeing bonds, you know, surge in Spain and Italy, and I just, you know, Sherry Cooper just saying, look, we could actually have a bond crisis, and, you know, it doesn't stop at borders.
No, it's true, and the credit crisis that we ran through in 07 and 08 between banks, you don't want to see that happen again either, particularly in Europe. I find Europe and the U.S. are an interesting study in contrast, where one is going the austerity route, one is going the stimulus route, and I think the market is showing that they don't have confidence in either one, or they're jittery about what the outcomes are going to be. So that's providing a lot of drama, and that's also causing what the action is in the market right now.
It's an interesting insight, though, because, I mean, that's maybe the sign of a bearish market, right? No matter what you do, the market's going to sell off. It doesn't matter if you stimulate or don't, if you do austerity. So
exactly.
Yeah, all right.